Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on March 21st, 2022 for a Forex market analysis for you. We're going to cover all the major currency crosses. Before we get into it, we'd like to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. And let's see, if you haven't done so already, please like and subscribe to our YouTube channel. We would appreciate it. And by the way, also during the course of this webinar, at any time, if you would like to leave a comment in the chat, please do so, and we will address those comments, as well as if you have any questions about any markets or other different currency crosses, don't be afraid or hesitant to ask about them. So, with that, let's get to our live active screen here, and oops, let's move that off the browser there. Okay, we don't need that there. Alright, so we have the forex-trading-unlock.com website pulled up already for you, and we are going to talk about all of what is going on ahead of us in the week. Last week we had the Fed meeting, obviously that was a big deal, and now we are coming off of that reaction, and now we are going to see what happens this week. Now we do have some interesting patterns shaping up, so we will see what is going on with that right now. Alright, so we have on the www.forex-trading-unlock.com website the workstation page pulled up. So what do we have here for March 22nd? We have some little minor numbers coming out then. I would look more towards Wednesday with PPI for the pound and CPI for the pound. So for the UK, I think we got some good numbers. We have new home sales and also weekly crude stocks in the US on Wednesday, our normal Wednesday number. I would assume that the oil numbers are going to be very big this week. So as far as that, then we have on Thursday, we have jobless claims. Obviously, we have PMI for the UK for the pound. Durable goods, that's also going to be a big issue with the bonds as well as the currencies. So we're going to be watching that one. And then on Friday, let's see, we have CPI for the yen, and we have CPI for the United States as well. So those two currencies, the US and the euro, or excuse me, the yen on Friday will be very active. All right, so what do we see here? We have a very interesting non-event of a day starting off this week, Sunday into Monday morning's trade. We have the European markets closing, and now we have the U.S. markets open, and right now we are kind of in limbo with the euro-US dollar, which is the biggest weight in the dollar index. Obviously, with the euro slightly lowered, it is helping to give a little bit of support to the U.S. dollar. We fell just shy of this 111.53 upside correction target zone on Thursday. So oddly enough, I think we still maybe could get a little spike up there, but who knows? We'll have to see about that one. If anything, remember that this is still a bear market. We are looking for this as a correction to end somewhere in this area and then come back for a test of support. I will be very mindful that if we take out yesterday's low, it's very likely that we're going to come back down and test this low here at 109 even. Excuse me. If we fail from here, well, obviously we know that the bearish trend is in motion once again. The question is, how much momentum does it have? I'd be very leery of seeing a break like we had from 114 to 108 just happen precipitously very quickly. The one thing that could change that, though, however, is the interest rates. If the 30-year bond and the 10-year note, which are now heading towards their low, just to let you know where this market is at, it's right around 150, 18, 15, I think. Let's see, what do we have here? Yeah, 150, 18. That's now, it's a little bit of a delay here for the futures off the CME website, but that's where they're at. So that's giving a little strength to the dollar. So obviously you can see with the euro, it's a quiet trade. For any of you that are in this trade, I would look to keep your wrist tight if you're short, especially only if we get above 112.32 would I say that this market's going to be neutral. However, I really don't think that that's going to happen. You can see how where this area here was support, especially here and around here, this is now becoming resistance. So if we do get a rally up into here, I don't see it being very sustainable. Excuse me, only a close above, say, 112.65 would confirm at least a neutral to higher short-term bias for the euro-US dollar. All right, let's go to the British pound US dollar. Now, you guys, we got to be cognizant of the fact that oil is up also. The fact that the oil is up $6 again today, that's giving strength to the euro. It's also giving strength to the pound. So we have a little bit of divergence. Remember, we've been talking about this for months, that you have to be accepting of the fact that we have divergence in the markets. The dollar index, although it is looking very strong and what have you, that's because it's really wherever the euro goes and some of the other currencies weak against the dollar, that's giving the strength to the euro, to the index, because the pound obviously is going the other way. Now we had this buy signal down here a few sessions back. It's a high probable Japanese candlestick pattern, which you can learn how to trade that by reading the book that we talked about in the beginning of the webinar. But as a short-term other way of looking at it, we put up the 50% and 0.618 levels here to as far as an upside target objective. Now overall we are bearish the euro as long as the the Ukrainian and Russian conflict is maintained. As long as oil stays very strong, then we are looking for the pound to be at least neutral to not quite the bear that the euro is. So even though right now it has been trending lower, we have a short-term corrective move that we are targeting up towards this 133.25 area, 134.02. The key thing was to get out above this breach of resistance here from this previous high. As you can see, we've had this marked, since last week, that above 131.95 here, that starts to get us ready to catapult us back up into this area. So it wouldn't be out of the realm of possibility to see the pound continue higher this week while the euro will continue lower this week. So we'll see how this moves higher over the course of the day. I think the strength will remain, especially since the European currencies are, European markets are closed. Right now I think that this is a good show of follow-through momentum, and I believe that you'll see this grind higher over the course of the next two sessions. Remember, we do have some numbers coming out in the UK that we already discussed. Depending on how those come out, will probably be indicative of where this will go. Now, the one thing that could be retarding the strength in this market would be the interest rates that I already showed you that are on their lows. As this happens, the strength in the dollar comes from the value of the market rate on the interest rates. However, remember, the Bank of England is also now becoming a bull when it comes to rising rates. So only if we fail from 129.98 do we have a valid sell signal confirming a major continuation of a downward trend, in which case at that point we would see it go down probably towards the 128.5 to 128 even area. I wouldn't expect any extreme sell-off. I think that you're going to see a grind higher where you'll see a corrective rally like this and then boom, take out new lows, kind of like we did here where we took out this low, boom, we started to correct. We did take another big wave up. Now we're coming back up to here, kind of probably around this area, or like I said, where this consolidation is, which comes right into our upside target area, float up to here, and then either go neutral or come back down. If we have a big sell-off in oil, then you might see a lot of pressure on the pound, especially as we know that the Fed is definitely aggressively going to be raising rates in the U.S. now, upwards of 7 times, meaning at least 7/4 of a point each over the course of the year, which would make it a total of 2 percentage points over the course of 2022. So we'll see how that goes. I like the final. I mean, they're playing catch up, but I've been saying that they should have been doing half points already a while ago. But hey, what do I know? I've only been trading the Treasury bonds for 30 years, so for 30 plus years. Anyhow, let's look at the U.S. dollar CHF. So this currency has been a bit of a bear the past couple of days. We had the sell signal here that was validated a couple sessions back. Now today we have follow through coming towards our downside target area. This is where I think we're going to see a bounce. I do not see this falling below 92.48. Remember a couple weeks ago I said parity is something that is not out of the realm of possibility, but should we go there, it's going to be a grind where like we finally broke out to the upside out of this trading range. We spiked up just above 94.5 here. Now we're back down, you know, towards 92, 98, so basically 93 even. That's a 1.5 retracement. Now we're going to probably find good support in this area here. I think what we're doing is lifting the range that we've had. So we're going to be bouncing probably in a $2.5 to $3.5 range where we may have spiked high here. Now we'll come back here. We're going to make consecutively higher move highs and higher move lows, but it's at a tortoise pace where you're barely breaking through or piercing through resistance to the upside. Then all of a sudden momentum wanes. We come all the way back down. We find support just above these other areas. So as you can see, the market has been trending somewhat higher, you know, and that's a key thing to be aware of. So I think that if you watch these lows here, especially here, this is the crucial area. Only if we fail from 91.48 would I be on a longer term bear with the US dollar Swiss, but it's really hard for that to happen with the aggressive move with interest rates. So I think that this is a profit taking slide, and I would be very cautious. If you are not already short here, I'd be very cautious selling into new lows here. I would be looking to buy somewhere in this area here, or wait till you get a buy signal even right around this area here. If we fall below 92.48, well then obviously the bearish pressure remains. I would think that the only thing that could really hit this that hard would be if you see like the euro and the pound start to aggressively get bullish against the dollar, which the euro is not, and since Switzerland is no longer kept its normal neutral bias with Russia, that's a big deal. So I think that that's going to come into place when it comes into how these restrictions are manifesting and what have you. Now, as far as bullishness, wait for a buy signal. I think I would be very cautious buying into this until we see a consolidation. If we take out 94.5, that would be an extreme move. I think the only way you see that is if you see oil really spike higher, which it could. You know, another thing you have to look at is, since we've had that little correction in oil, this has eased things with the dollar. Now, if we see a rally, you got to remember, they have to buy oil, so that would be something where that takes away from the flight to quality strength of the U.S. dollar Swiss. So let's see if we have any questions on YouTube or on... No, we don't have it on YouTube. Thank you for the likes on YouTube. We appreciate that. No questions or comments. And if you watch this video later, just leave a comment in the comment section, and we will address it and bring it up in our next webinar, or leave a comment or an answer on the video for you. So, all right. So U.S. dollar Swiss. Now let's go to the U.S. dollar JPY. All of you that have been following me know that I've been long this for a while. Very happy about this rally over the past few sessions, and now also with the new Fed speak. Should we get a retracement off of the high from Friday, I think you would have to fall through 116.97, 117 area, really, to even get this market to really spike into support higher, lower rather. Now this has been grinding higher, just kind of like the Swiss has, but this has been definitely trending higher. It was only from November into basically March where this market had consolidated, and it was moving higher, it was trending higher, but the higher move highs and higher move lows were very minute, where we made a high, came back, grounded on this support, made a high, made this low, boom. You can see every time we breached resistance, we didn't get very far before we came back and retraced back, but we pretty much always found the midpoint from where the last low was and found key support. And now we've had this big move upside. The question is, are we going to have a profit-taking move? Well, that's very likely. You got to remember, markets go out like they come in. So for us to have a short-term correction, oh, I didn't need to put that one. I already have this here. So we keep moving this over here. So the velocity of this slope, even though now it's tapering off or consolidating, it's very likely that should we see a bounce in the interest rates or a slide in oil, that we find this correction. Now, if oil, because now it's up $6 today, I think that's one of the main reasons why the U.S. dollar, Japanese yen is not going lower. Something else we could key off is the British pound JPY. So the British pound JPY is continuing to press forward on this rally. So why are we looking at this? Well, the best indicators of the market are the markets themselves. So if the pound is strong versus the dollar, and the pound is strong versus the yen, then that would make the US dollar and the yen in flux, okay? Because the pound is a strength right there. The pound is strong because of oil. US dollar is also strong because of oil and interest rates. So those factors alone help to support the US dollar, okay? So just be mindful of these things, that where the US dollar yen, even though a profit-taking move would be very likely to occur right now, and is actually something that would be healthy for this current rally to maintain the bull market, which, who knows, maybe this is the beginning of a super leg up. We went through our 117.5 area. We're firmly above it, and 122 is our next target for the longer term. I thought it would take a little bit longer, but then I also thought that Putin wasn't going to engage this conflict with the Ukraine until another 2 to 3 weeks later. It happened. Now we're almost full month into it, and I, at this point, thought we would have been 2 weeks or 1 week into it. So he did go in a little bit earlier. I've been calling this, saying that after the Olympics that the Russians were going to move into Ukraine since, well, actually 2 years ago already, but ever since, or actually, yeah, no, a year and a half ago, ever since the election in the U.S. So anyhow, these things are all falling into play. We have to be mindful of them. Technical things are off the table right now for a lot of markets because of this. So meaning that you're going to see trends over-exacerbate. Oversold and overbought indicators are going to be stressed because of the current events and fundamentals at play. So be very mindful of your money management and discipline with your buy and sell signals, because there's a lot of things that normally don't come into play this strongly, especially global geopolitical things. War is something, especially this is not just your normal conflict. We have some of the biggest players on the planet all engaged in this. So anyhow, with the US dollar yen, if we get a correction, I think you definitely have to fall below 116, basically 117 area to press it down towards this 116.25 to 115.81 area. This would be a good spot because this was where resistance was. So where you find resistance, you find support. So where all these tops were to find support here for an extreme slide, a big correction. Now, what would have helped this occur? Well, yeah, I would think you would need a good $10 to $15 sell-off in oil, some sort of real ceasefire in the Ukraine, as well as a big rally in the 30-year Treasury notes. Do I see any of these things happening? Not really, not anytime soon. I think that if you could, I mean, in a perfect world, I would love it for all those things to occur simultaneously, because it would put the world back on a better path. However, I don't believe in that right now from the speak of what is going on. So currently, I think this is a tough trade with the yen. Look to buy dips. Like I said, I don't think you're going to be able to get down towards these areas unless those fundamentals change. If we take out the high from Friday, be mindful of that. 119.39 has this market up at pressing 120 in a heartbeat. You could see another blast where we go, you know, like from 116.25 to 118.25, basically in a period of 2-3 sessions. So that would be another 2-point boost. That could put us at 129.5, pretty much, almost, you know, up into that area, or 129 even, or it's not 129, 121. Excuse me, so that would be only $1 short of where we're looking for at the 122 mark. So I could see us, if we don't pull back, like as I said, markets could tend to come out like they come in, or they go in. If this is consolidating before we have the next leg higher, then that would make a lot of sense, where it starts to widen out the slope, even it out, and now boom, because of those fundamentals. I mean, if it's a runaway bull, it's a runaway bull. This does occur. Don't expect it, where we have already proven that we've stopped this chain of only piercing resistance, then correcting in a big way. Only piercing resistance, then correcting. Now we've exploded through resistance. We haven't found we have not had a correction off this yet, and any downside move will be viewed as such. Okay, so now where are we? Let's see what we got going on here. No questions still on the YouTube and Twitch. You guys are quiet today, probably because it's lunchtime, and I usually do this a little bit earlier in the morning. A lot of our European people and everyone else probably asleep right now. Sorry about that, guys. All right, let's go to the AUDUSD, commodity-driven trade here with Australian dollar, US dollar. We are still bullish this market, looking for a rally. I think with the interest rate issue between the two currencies, that's the only thing that's putting up resistance for a Australian dollar, US dollar. I would be mindful of any slides. I would think that any break is a break to buy currently, especially with oil on its highs, and with tensions that are rising as well. The one thing that would be interesting is what would happen if China invades Taiwan. Is Australia going to all of a sudden put sanctions on China when the U.S. decides to put sanctions on China? Would that occur? You know, is this Ukrainian conflict a signal to China and Xi Jinping about how if we do start to have a conflict, our companies pull out? Could you imagine if all of our companies pulled out of China? What would that do to their manufacturing engine? Would they usurp the technology that's there and whatever. Well, yeah, they could, but they wouldn't be able to distribute it and what have you. It would be something that would be a short-term gain and a long-term loss, and definitely would change the relationship between China and most of the other world, the rest of the world, especially those that consume a majority of its goods. So we don't want to get ahead of ourselves, but these are things you have to think about, how that engage things with Australia, because Australia is one of the biggest providers of raw commodities to China. China is their biggest customer. So do you think that Australia is going to put an embargo on their trade with China? That's a good question. I mean, it's one thing to have the EU and a collection of countries when they have the U.S. backing them, but the U.S. and Australia are partners and are allies. However, Australia is a continent and a country, and it's very close to China, and they're in bed with them much deeper than we are. So I wouldn't doubt that they're not going to put sanctions on China. Things will not go well with that relationship. But right now, this market is a bull. We're looking to continue to pierce resistance, buy dips. Right now, we had this buy signal here. It had us targeting up towards, we already blew through our upside targets, so that's a very strong momentum. We believe right now it's a buy dip scenario. We're not looking for any type of slide. The only thing that I could see that would cause a sell-off here would be a big rally in interest rates in the United States in pricing, meaning it going down in the market rate, which I don't see happening anytime soon, or if we see a big sell-off in oil. All right, so New Zealand dollar, US dollar. This market has a few problems of its own, though. Whereas I've been saying this for the past couple of weeks that Australia is coming out of their COVID restrictions. New Zealand is not quite doing it as the same, and they still have a lot of things that are causing issues with their citizens as far as COVID mandates and stuff like that. So it is in tandem with the Australian dollar over the major course of its trend, meaning that it is starting to trend higher, and I believe that it will continue to make higher move highs and higher move lows. You can see that this, on the other hand, did make a higher move high on the day, but it's lower now on the day, so versus where the Australia is. I do think that Australian dollar has the potential to have more momentum to the upside, meaning more potential as far as the trade's concerned, as far as how much rewards you have to look for in that trade. I don't think you're going to cover as much ground with New Zealand dollar. So where the Australian dollar, I think you're going to be more of a 1 to 2 or even maybe 1 to 3, meaning that for every 3 pips of appreciation in the Aussie, you'll see only 1 in the New Zealand dollar. So whatever in tandem trade they have, don't expect the follow through or the momentum out of the New Zealand dollar. All right, so we don't really have any numbers for you. We're just bullish right now. We had this buy signal just like we had in the Aussie, and this one here has already hit its target already. So as far as is it sustainable, well, it's already playing with the highs here. If it closes above 69.26, well, guess what? Higher move highs after a higher move low. We know what that means, right? Bullish trend. Okay, so now let's take a look at the US dollar Canada. All right, US dollar Canada. This is a really big thing here. We've been saying that, is this market going to hold up or is it going to break? Well, this is a key thing here. We are hovering on this support line here. If we fail here, that means we make a lower move low after a higher move high. That big neutral is definitely there. However, if you look at this, we made this higher move high. We made this higher move low. This is a lower move high. Now we're looking to continue forward. If we can sustain a trade below 125.85, this could be very likely, especially with the aggressive stance with the Fed. Getting down to 124.48 is definitely in the realm of possibility. Any failure from there, my friends, definitely confirms an overall bearish trend, which, if you look at it, this has been in a very big bear trend. We made this lower move high here, higher move low, lower move high, boom, once again, here we go. We can go failing down here, and the overall bearishness of this market would return. So now this is one of the parts where, remember I told you there's divergence in the dollar index. This is where, like, the euro and certain other currencies, they're going to be weak versus the dollar. This is a bearish mark for US dollar Canada. That means that the dollar is weak here. So like the pound could be strong and the Canada can be strong. Remember, both oil producing countries. Australian dollar, oil producing country. So those three factors right there help to negate a lot of fundamentals, because when it comes to their interest rate factors, they may not be as aggressively raising rates as us, but they're raising rates as well. So there's a competition there where it neutralizes. Then you have the US dollar, Japanese yen. Why is that such a strong bull? They don't produce oil. The higher oil goes up, the weaker the yen comes against the dollar, even though we're not supplying them oil. Interest rates. Bank of Japan is not doing what we are doing. So that means that there's weakness there in that fundamental. Okay, so you throw those things in, then you throw in the conflicts in the with Russia and the Ukraine and sanctions. This also impacts the Japanese economy. Blah blah blah. So this is where we find where there's strength versus a dollar, and then there's weakness versus a dollar. Here's where we have weakness versus the dollar, strength versus the dollar, meaning Canada is very strong, U.S. dollar is weak. So you can't watch the interest rate factor or the oil factor as much as those factors there are neutralized right here when it comes to these markets, because oil is the biggest player in that. So the higher oil goes and the less we pump, the more we buy, the less, that whole scenario right there, that gives strength to these currencies, Canada, the pound, and the Aussie. So we'll watch them as they bury the dollar, and the dollar buries other currencies. It's a tug of war. That's what divergence means. It means that every once in a while you're going to see all the currencies trend either with or against the dollar, or with each other against the dollar, or the dollar is going to be against them, meaning that it's stronger. Or you're going to see right now for the overall main part is that there's divergence. So you'll have some days, like for instance with the Fed coming out with their release, obviously you're going to see dollar strength versus everything, and everyone retreats a little bit. Now we're going back to the normal swing of things, and that means that certain currencies are rallying against the dollar and certain currencies are not. So the dollar index is going to be in a state of flux. In fact, let's take a look at that right now. So as you can see on Friday, it ended a little bit positive. Today's the kind of day it's going to be very neutral. It's chopping around. Right now, the dollar index is consolidating. Can we reach 100? Absolutely, we can. We need a big sell-off in the euro for that to happen. It's the biggest weight in the dollar index. Is it going to happen? Maybe, maybe not. I don't know. Right now, I think we have a lot of consolidation. And the key thing is, yes, consolidation. So right now, it's quiet on a Monday, and we're going to let you go after this since we don't have any questions. I don't think. Let's take one more look on YouTube and Twitch. On Twitch, we have no questions. YouTube, we have no question, but we do have some likes and shares, and a couple people that were watching. Kind of quiet because all our European people are snoozing right now. So sorry for the later video. You guys have a good day. And one thing I want to also remind you of is that if you haven't done so, make sure you like and subscribe to YouTube and Twitch to Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. With that, I'm Teddy Keckstedt from Forex Trading Unlocked. Check us out every day at www.forex-trading-unlocked.com.